What's going on, traders? Hope everybody's having a great weekend. It is Sunday, September 10th, and we'll be going over an analysis of the S&P 500, the Spider ETF. Take a look at some areas on the market we may want to engage with it, where we could manage our risk, and what to potentially expect coming into this week and Monday. Got a lot to go over today, so let's get into it. But before we do that, I wanted to take a quick second, thank all my listeners, my subscribers for joining me every single day as we try to navigate these markets. Really appreciate the support. If you haven't already and you're new, think about subscribing, smash that like button. Really helps out the channel, would mean a ton to me. And of course, always, this video is not to be viewed as financial advice. It is for educational and entertainment purposes only. So with all that out of the way, let's start off and start to look at what we want to be aware of as far as economic events. And we do have an elephant in the room. Let's pull up the calendar here. Nothing on Monday and Tuesday, but Wednesday here, CPI 830. Okay, so big number there that we want to pay attention to. Monday and Tuesday, we could see a little bit more hesitation in the market, and there's some things on the charts that also suggest this. But let's just be aware that Monday and Tuesday we can see a bit more choppy price action, a little back and forth as the market also kind of waits in anticipation for that big CPI number coming in, and with oil coming rising recently, we may get a stickier print, but that comes out at 8:30, and then Thursday we have initial jobless claims, core PPI, in U.S. retail sales, all things here that we want to pay attention to. So Thursday should be on our radar as well. But at least, for me, CPI, of course, is a little bit more of a market moving event. Either way, jobless claims and PPI, we should definitely watch out for that. And Friday, really nothing for me that I'm watching out for that is too important in my eyes. So interesting data points, but nothing really that is a market mover. So let's just stay on our toes, extra careful with our risk as we come into Wednesday with this big data. All right, with that being said, let's get into some charts here, and we'll just start off at looking at where we are as far as our positioning on the chart. What kind of weekly candle did we print, and what's going on in relationship to the prior week's candle, and where are we sitting? All right, so just looking at the candle here, and let me well, I'm gonna keep these on here. Looking at the candle here, obviously red candle. We came in, retested the weekly 9 right at 44. 443.30, where is it, 88, and we did see some buying pressure there. The one positive thing here for the bulls is that we did close above that key 444, 445 area, this pivot line that we've been talking about, of course, ad nauseum. We did close about that, but as far as where we are sitting in relationship to the prior week's candle, we really, the bulls really wanted to see a close in the upper 50% quadrant of this candle. So it would have been nice to see a little bit more buying pressure and to see us actually above this line here. That would have been nice, but we did close. They were able to close above the pivot. So although we did not close above the 50% of last week's candle, we did close above the pivot. And really this puts us kind of in what I was saying before, a kind of a more neutral pattern overall in the market. As we are kind of trapped, and you can see here with at least these two trend lines that you can see price is starting to compress, and we're really not outside of a range in either direction. So another reason to kind of be a little bit cautious as we kind of work out this current price action. So but the one thing I did want to say was that that cognitive bias that we had talked about before, because you can certainly still make a case here for two types of patterns, right? You have this compression type of pattern coming on, squeezing price together, but it's not textbook. Now, before we had more of a quote-unquote textbook head and shoulders, but right now you could still technically make a case 4-1 forming currently. Now, you know what we talk about these head and shoulders, it is not valid unless we actually break the neckline and head down, possibly even come back up, retesting for that extra confirmation and heading down. But it is there and something that we want to be aware of. So yeah, I think that's important here. But let me actually take this off now. But as far as more of a structural perspective, still, we do have obviously our swing low here, another low, and we have another higher low, and another higher low. The main concern that I have, although we have been printing this, what did we not do today? We did not create, this week, excuse me, we did not create a new higher high. Okay, so that would have been a little bit more of a stronger posture for the bulls if we did in fact make a higher high and really starting to confirm this trend. So until we do that, you know, it's still going to be kind of this neutral zone overall, and you can kind of see this, you know, zone here where we're just really in the 50%, you know, quadrant of it, right? You know, of this range that we've been trading in. So until we get a move out of this, it's going to be a little bit tough to see really big moves in the market. Now, of course, CPI, that may be the catalyst that pushes us one way or the other, but I think it's worth noting that while we're in this zone here, we just want to be careful and aware of this potential price action that takes us like this. So so just let's stay on our toes overall. All right, though, but we still could make that case for the higher lows. So just so right now the trend is up. I mean, sure, you could also make, you could even start to make a case here. What if we've got, what if we've got a little bit of a rising wedge type pattern that we start to fill out? So another possibility. All right, so let's take a look now at the daily time frame, if there's anything we can take away from that perspective here. We have closed still underneath the daily 9 and the 20, and I think that bear flag that we were talking about potentially on the weekly seems to be a little bit more self-evident here on the daily time frame. As you can see, here is our flagpole, and then we have here coming up, creating the flag, and then the next move usually ends up like that. So we want to keep an eye on that. Although we are in the neutral stance right now, overall, I would say it's kind of still a bearish to neutral stance, seeing we are still below these daily 9 and 20. And the failure to make a new weekly higher high is also something that you don't really want to see overall. But we are still above 445 and 444, so I think that's one good thing there for the bulls. All right, let's see here. What else do we want to go over? I don't think that there's anything too much more from this perspective. I think the head and shoulders is a little bit more kind of evident from this view. But again, it's pretty meaningless unless we break the neckline, And sometimes I have to say these kind of crooked head and shoulders can end up being more powerful, but meaningless unless we get that. All right, so let's take this off here. I think that's pretty much everything wanted to go over on this chart. Let's start to take a look at some of our other bigger picture charts and see if there's anything we can take away. Not too much on this one. Let's look at our bigger picture fibs. Would have loved to see us close here above the 446.25. That would have been a little bit more encouraging in my opinion. Not closing above this 23.6, not the best look. We want to extend this megaphone trend line out now, as well as we're moving along in the month, because if we do start to sell, I wouldn't be surprised to see price potentially come back and retest, and then from there we will look for potential buyers to come back into the market. So another scenario, if we do start to break down, obviously with the seasonality of September as well, we have the statistics to say that that is a slightly more probable scenario. But just as a backdrop, of course, we're not making trades, just based on that one variable alone. All right, so yeah, I think that's pretty much everything from this chart perspective. I wanted to go over that retest and not closing over the 23.6. All right, what else do we have here? Let's take a look at our daily trends. Where are we? I think that this is a nice illustration as well, kind of giving us that that viewpoint that we are more in this neutral stance, right? Where we have this next big bullish pivot here up in the 440. What is this? The 447, 448 area. And then we've got this lower one here back at the 444 area. So this also can be a warning sign that until, again, we see a break in either direction from these major pivots, that it's going to be hard to see really strong moves in the market overall. But, maybe CPI will be the catalyst for that. Let's just stay on our toes, though, for Monday and Tuesday before that big data, because we could just end up trading, like this. And like I was saying earlier, we need to see a break above or the break below for the next move in the markets. All right. And let's just take one more look. Do we have any other charts that we need to go over here? I think that's about it, to be honest. Anything from our main daily? Nope, we're just hanging out right here in this demand zone, just going back and forth. So really nothing more to go over from this perspective either. All right, cool. So let's take a look a little bit at the internals. What can we sense from that? We did open up on the ADD here above the 0 line, so that was good, but pretty much faded down. Market again just hanging out here again right in that neutral zone, so we're not really in the trend higher area as far as the breadth is concerned, or the or lower. But here, and looking at the Volt, same thing, not very strong in either direction, just barely above the 0. Okay, that's good, but coming up just ever so slightly, so not really showing much commitment from either side. And let's just take a look at how the sellers did overall. All right, I mean, they were okay, but nothing really too impressive. Looks like it picked up a little bit towards the end of the day as far as the outflows, but nothing like we saw in the previous session. So just kind of a weak reading there. Let's see how the bulls did. Okay, well, the bulls actually a little bit stronger here. Stronger inflows than outflows. So I think that this is, although we're getting mixed signals overall with the ADD, the inflows for positive volume, buying volume, not too shabby. I mean, of course, it's not anything like it was last week on Tuesday, but certainly stronger than the devol. So. I think that that's a little bit of maybe an encouraging sign, but still very close. When we look at the Volt, it's very, very close. And you can just see that here. It's really not, it's just kind of flat. So, all right. We'll have to see what that looks like in the morning. So really nothing to say, nothing really to kind of see here other than the fact that really there's just no commitment from either side. All right, let's take a look at our ratios really quickly here. Looks like the percent of companies that are trading above their 50-day simple moving average pretty much flat. We were looking at this 50% line, could never get over, kind of double topped and came back down. Interesting area though. I mean, we have found kind of total market support in this range before around 29. Still a little work to do, but it doesn't look like there was really much going on in the market. But I think that this is a little bit more concerning here with the 200. The amount of stocks that are trading above their 200. This one did not have the best close. We closed below the 50% mark here. I think that that is one bearish indication. We would want to see more stocks holding the 200 for sure. And now we are below that 50% line. So here's a little bearish clue to what may be going on in the markets from a broader perspective. So let's keep an eye on that. We really want to see, or at least the bulls want to see, this shape up on Monday and Tuesday and get back above that 50% line. But of course, anything can happen with CPI, so it's real hard to say. All right, okay. Let's fly over here. All right, let's start to look at some other of our charts here and take a look at some. Well, let's go into our day trading fibs first. All right, just hanging out in this, okay, actually, yeah, I wanted to go to the hourly. Okay, perfect. All right, so again, we're just hanging out in this neutral zone. You can really see the last couple of sessions just trading back and forth here, and no real decision, no real strong conviction, I should say, from either side pushing us up higher or lower. You can see here they kind of trapped the, whoops. They kind of trapped the bulls here. Excuse me, the bears here. They trapped the bulls. So they're playing games with the market, with all the market participants right now, and that's why it's best while we're trading this just to be a little bit more cautious. Can't deny though, overall, as far as from the hourly perspective, we are trading in a downtrend, right? So that is the overall trend. Is this just kind of consolidation before we break down lower? It could be. What we really want to see, and one thing we are kind of looking at as potentiality is a looking like a possible inverted head and shoulders here. You've got a shoulder, you've got a head, you've got potentially a right shoulder here. And this 446.25, we've talked about this area before, but this is going to be our neckline for that head and shoulders, or inverted head and shoulders potentiality, and we need to see a break. You can see here we tried to break out multiple times on Friday, unable to, but we want to see a breakout, come back, retest, confirm that break, and then look for moves back up higher, and potentially retest this downside move here. You can see it lines up from Wednesday and these highs from last Tuesday. The only other thing that I think is worth mentioning, and we haven't really worked it out yet completely, but this big move from Wednesday, a lot of thin structure in this area. So we want to watch if bulls are in fact able to break over this neckline and really get some conviction and volume behind it. I don't suspect that this area will be too hard to for them to chew through. So watch for, if we do break out, watch for all this area to potentially be worked out in the auction with that thin structure. Kind of just something to note. So that area it could very easily be filled, and it may not be too hard to come back up into that 448 zone right here. All right, so let's see, anything more that I wanted to go over here. Certainly breaking below our 444, 443 area. If we start to sweep these lows, that's ultimately going to be of course, a bearish sign. And really, like I was mentioning already, we are in the downtrend overall. So we've got our low, but here, what is this from? With this downtrend that we're already talking about, we're just making. We had our swing high, and then a lower high here, and a lower high here, right? So, and this was a low, lower low, and now they're trying barely, to putting in a new trend, but nothing really confirmed on that yet. For this to look better, again, same thing on the weekly, they would have had to make a higher high and probably closed and gotten back over 448, right? So that's not there yet. All right, I think that's everything I wanted to go over on this chart. I may mess around with these fibs though, but I think they're okay for now. Oh yeah, they're fine. Okay. They just need to be just a little bit lower. But I'll fix it later. All right, let's go into some day trade, or some of our balance zones that we have been watching here, and kind of look at some more levels that we may want to trade about and through manage our risk. But we have been trading in the same kind of zone here, so a lot of these levels should be pretty familiar. We're going to again be careful and extra cautious coming into CPI, and we went over all the reasons why as well on the chart. While we're in a much more neutral stance, bearish neutral stance, short term, of course, long term, we are still bullish, but so, again, 445 is what they're going to want to see hold. If we can't hold, we're likely to come back in, trade into 444. So 444, I'll pretty much, ideally, for the bull case, I want to see is still opening up above 445, 445.50, ideally. But really, we got to get back over this pivot here. Once we get over the 446, 25 area and actually hold and confirm, you can see here these hourly wicks, no hourly confirmation. So a 5-minute candle close over 446 isn't going to cut it, right? It's a key area, and we need to give it that little bit of extra time. With that being said, if we do start to get over, then we're going to look for price to come up and price to come up, retest, and then we're looking for moves back up into this next balance zone, the top of it at 447, 447.50. And once we get over that, then we can start talking about that level, see about another retest, and then moves back up into the 448, 448.50 area. And that 448, we were already talking about that earlier. But the biggest thing that I would want to see hold is going to be 445. That's going to be the most important. Yes, of course, we have got the 444. We've got this level here that is also that major retest. So, yeah, I would be still interested in potentially buying the, if we come into 444, maybe hitting the 445 calls at that point. But we have to keep in mind, look how many times this area has been tested. 1, 2, and 3. 4, and multiple other times before that. So let's just be a little bit, on the cautious side, or at least I'm going to be, about directly taking this 444. Certainly a safer move would be the look below and fail. If we broke below, and then we hit, broke below, come up, recapture, and then we get a move like this, something like that. So you want to see that break below, and then recapturing the level. But I am still interested in that area. And of course, last stop here, we have our swing low that we were watching at our half gap at 442.75. So I'll keep an eye on that as well if we do come into it. But if we really start to get, under 444, I'm going to take that mostly as a bearish sign. And I may depending on looking at the rest of the market, you know, if a lot of the big boards are down as well, I'd be probably a little bit less keen on buying this half gap. But it is a thought, you know, for a potential double bottom if you actually start to see bidders coming in on the level 2 and on the tape. But you'd have to just really make sure you're watching that. And if you can't watch what's going on the tape, it's going to be a little bit more risky to kind of gain on what is going on overall in the market. So we kind of went over a little bit of the bullish play here, recapturing 446 into 447, 447.50, over that 448, 440. 850, maybe 449. Those areas, obviously, just talking about some direct shorts, you can consider, you know, potentially shorting into those areas as well. Maybe not the 446, but it is a thought. I'd be a little bit more interested in this play coming in and taking some off here and then looking for here and then runners into here. But you know, we could also look at potentially direct shorting into here and just again the opposite, coming like so and then into here. Those are some direct short thoughts, but you know, again, you know, if Apple and Microsoft are up and the whole market, the breadth is strong, then you want to be definitely a little bit more careful about those direct shorts, as they've got a little bit less probability of working out, and maybe should lay off and just wait for something like this. Like, even if the short works, you still want to be with the wind at your back and just maybe look for a retest into here and go long for the move, potentially, you know, higher, or just, you know, we might just get to here, but you know, we don't know that. But if the market's strong, you know, overall you have a higher chance of breaking through those levels as well. So you don't have to capture every wiggle, you know. Oh, you know, you stand out of this short and you go, oh man, it actually worked out, I missed it, and then you're so, you know, frustrated, you're going to miss this retest for the long to actually go with the trend, right? So something you want to be careful with. Yeah, so those are some bullish ideas, as well as some counter trend trades. Now, what if we open up below 440, 445, and below 444 here? Okay, then we're going to be looking a bit more to the bear side, potentially some moves that come up, retest, come back down into this area, maybe certainly get some out here, because we would you know, we don't know what the buyer reaction is going to be at this half gap, but if I was playing this retest here, I probably would just do the 444 call puts personally. But you know, you could even consider just the 43s. That, you know, that probably would work as well. If we do start to break under, though, let's look for lower prices and come into the 441, 441. 75 to 45 area, anywhere in this bottom part of this balance zone as our next target. And if that breaks, then we're going to be looking ultimately here for the 440. So that's what we'd be looking for on that downside. You know, one could potentially consider, if we break down in this area, the lower part of balance, yeah, you know, again, kind of the same thing about the direct short up here. If the market overall is looking weak, you've got way less of a chance of it working out here, and this support actually holding, finding a bid. But it certainly is a thought that one could, you know, consider trading into here and looking for buyers to take us up like so from here. And if that was the case, then we would want to be, you know, looking for the half gap retest here. We would retest, see if they can actually break over. Maybe we come back and back test that, confirm, and then we come into this next area, back testing the 444. And if we were doing that, if you really wanted to be slick, hey, at that point you could say, okay, we're back testing this major daily level, and we were counter trading on this trade. Maybe I want to get out and flip short, and then you can hit it back coming into here taking more off, and then looking to come back in to where we started. So it's another trade potentiality as well. All right, I think that's pretty much everything I wanted to go over. Again, I really appreciate all the listeners and subscribers for taking the time with me to plan every day for the markets. I hope this helps and you find it valuable. Again, I would really appreciate it if you smash that like button. Helps out the channel a ton. Hope you have a great rest of your weekend. And remember, a profitable trader is a prepared trader. So plan that trade your plan. Have a great day in the markets. All right, we'll see you later. Take care.